Hey traders, it's Josh Bellinger at Option Sizzle doing a video for March 31st, 2010. It's Thursday, it's after the bell, and RIMM had their earnings just released a few minutes ago. And going into expiration, I saw a biased bearish indication in the option market, and over the last 22 days it was kind of neutral between the call buying and the put buying. So what I wanted to show is what and how to use option activity as an indication of earnings and kind of giving you an edge in what to expect with earnings. So RIMM here closed the day at 73.97. We had a little bit of a pullback in the marketplace, and RIMM late day started to sell off. Just looking at here, we're going to see activity that's larger than normal, and it's due because of earnings here. And you could look and see that the April 80s were the active on the call side in April, and looking into the April 70s on the put side here. Also looking in the May 70s, we can see the action there on the put side, and same thing here on the May 80s. Taking a look at the activity today, early on in the morning, I saw a bias to the short side. I started seeing puts being picked up, and seeing the calls being sold at the April 80s, also at the April 75s, and they were even going into the April 70s that they were selling too. There's some put selling as well on the April 70s and the 75s, and those came towards the afternoon and late in the day. Overall, the picture that it painted me on the top orders were that there was a bias to the short side, and that being is because the May 70 puts had a block that hit about 6,500 contracts traded on the offer side at 265, and from there started to see the calls look to be sold as well, and the top orders indicate to me of what the bigger players in the market are doing and what they indicated on trying to do. At the moment, they have priced in a $7 move here on RIMM at 73.97 closing. They're looking for a move into the $80 level, or looking for a move into just about 60, about $64-ish area. So with that, those individuals was looking at RIMM, how it is trading right now. Let's take a look at the daily here, and with that kind of move, we could see with an $80 move that would put us right into this level right here, and then with a move down in 64, we could see we have a decent support area, congestion area back here, which would have been to buy on this. And looking at the after-hour market chart right now, let me look at this right here. This is the, let me turn into the show the extended session here. We could see that we printed 66, bounced off, and now we're at 71.91. So at the current moment, you know, it was made to sell the straddle or the strangle on this because of the premium. They priced in a $7 move, and we've moved into that in that range. So depending on how you played it, if you bought a put, you would have lost money tomorrow. If you bought a call, you're going to lose money. The only way to really play this was to do a calendar spread, or to have sold the straddle or the strangle, as we look right now, and prices just hit just about 72. We're bouncing off there. So what kind of the indication, like I said, over the last 22 days was that it was neutral. So it kind of printed the whole, it was kind of a non-event. They priced in this move that just didn't really happen, and we're just a little bit lower coming into the pre-market here. Something that we talked about into the elite chat room, also in the private Twitter feed that I offer for members, I posted a tweet indicating that the bias was bearish, that they were leaning bearish, and the activity was in the last 22 days neutral. So this is what I use on this to indicate and help me get an edge on what I think or making a trade based off of earnings. If I didn't have the option activity, it's really just a pure gamble, and you really are just kind of shooting in the dark here because the reaction could be anything. Uh, Option activity isn't 100% indication of what they can expect, but when you see big blocks like 600 or 6,000 contracts trade in the May 70 puts, that's not small money. $2.65 a contract. That's not small money placing bets on where the price of this is going to go. That's big money making their bet on where they think it's going to do, and that's what I try to follow to help me get an edge because they're not looking to throw money away, and neither are you. So I'm going to wrap it up there. If you have any questions, feel free to comment below on the comment box here, and I'll answer back. You can always ask me on Twitter, or if you are a member of the Elite Service, which I'm active in the chat room every day, posting trade ideas, unusual option activity updates, and helping other traders with their own trading. You can always ask me in there as well. And if you're seeing this on a different site, feel free to visit www.optionsizzle.com and check out one of the products that we offer and join. Take care.